Greetings, everybody. This is Jeff Scott, and welcome to this week's rendition of my top-down review. It is April 10th, 2016, and I've entitled it, What Does Janet Know? Now, for those of you who have not been paying attention to the news, what I'm referring to is this. Fed calling expedited meeting on April 11th to discuss implementation of negative interest rates. Now, I'm not sure that I'm 100% certain what that means. Does it mean we're going negative? Does it mean we are going to raise rates because of the yen? Does it mean we're going to have QE4? Or is it a much to do about nothing? If you Google Fed emergency meetings, you could see that they have occurred frequently in the past. Typically, something happens at them. Hard for me to believe they're going to raise rates unless they want to strengthen the dollar against the yen. Speaking of the dollar and the yen, so let me review this. In yellow is the spiders. In white is the USD versus the yen. It goes up when the yen is strong. When the dollar is strong, white goes down when the yen is strong. You will notice that since over the last couple of years, there's been a pretty good correlation. When the dollar versus yen drops, the market drops. When the dollar versus yen goes up, the market goes up. Look at where we are today. We have a major divergence here as the dollar versus the yen is rocketing to the bottom. Yet, the spiders are up not at the top, but much closer to the top than to a bottom. So, something I suspect is going to give. Will the yen, which is seasonally strong now, start to weaken, and the dollar will lead it? Will make up. And the S&P will lead the dollar-yen complex higher? Or is the yen going to get even stronger and the dollar is going to pull the S&P down? I think that's an interesting question, and the more I look at this chart, the more I think I understand perhaps what the Fed is thinking. You don't make the dollar stronger by QE. You don't make the dollar stronger by lowering rates or going negative. You make the dollar stronger by going higher on rates. I just don't think the market is telegraphing that. It should be an interesting day on Monday. Disclaimer, this is for education purposes only. Anything I recommend in the spirit of education and should not be considered investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments. I am truly independent. I am not affiliated, except friendship, with any software vendor or trading company. Any tools I demonstrate are mine alone, and I have paid for all of them. Trading involves risks, and you alone are solely responsible for any investment decisions that you take, etc., etc. So, I've had a lot of questions about whether I'm going to do a live meeting this year or whether I'm going to do a live meeting perhaps with my buddy George Lee. Many of you know that I've gone back to work. I failed retirement because I was bored to tears even with trading. I'm a swing trader. I can't sit by my computer all day long. And so I started another company with my previous partners, which is, for me, low risk, a lot of fun, but also a lot of work. Therefore, I'm not going to do any planned live meetings besides this. John Person, who is a friend, mentor, teacher, trader, author, couples friend, everything positive I could think about. He's a great guy. Has a meeting coming up. Actually, we're going on a cruise meeting soon, but he has a fall meeting September 24th to 26th in Palm Beach Gardens. It's very attractively priced. There's 3 days in the hotel. I think he gives you 2 free if you're an early subscriber. I learn a lot every time I go. I will be teaching there as well. What I've decided to do is take the Friday before that weekend. So the weekend starts the 24th for John. On Friday the 23rd at the same hotel in Palm Beach Gardens, I'm going to do a 9 to 5 HGSI Doc Unleashed seminar. Many of you are aware that for numerous reasons. The Palos Verdes meeting is not going to occur this year, so now I'm going to start talking about this. I hate stealing patients. I was thinking physician. Attendees away from Ian and Ron, but since they've announced that they're not holding their meeting, now I'm going to put mine out there. I will do what I usually do at my parts is the 3-day seminar. I will do some of the philosophy that I learned from Ian and Ron over the years. I will review how I use HGSI and some of its cool indicators. I will then look at, once I've chosen a stock, how I manage my trades, how I take them, how I set stops, targets, losses, money management, and then we will go and review the market from a top-down approach using all the things that I taught you, and as time allows, I'll review how I use options. That is scheduled from 9 to 5 p.m. on the 23rd of John's meeting. I don't need a lot of people for that meeting to happen. In fact, if 2 people sign up, then the meeting will happen even if only 2 people sign up. And if it's only 2, then we'll move to my club so I can eliminate any cost that I'm going to have besides my time. If you have interest in either of these meetings, contact me at hgsidoc@gmail.com. hgsidoc@gmail.com. As always, I always like to call out my key influencers. I've already mentioned them. I started with CanSlim. Morales and Catcher, I think, make it better and more timely. Woodward and Brown made it electronic, more useful, and added some cool things. This is John Person. He's a trader. I mean, that's the best thing I can say about him because he's everything to me. He's a friend, mentor, as I said before, but he is a trader. Here are his 2 most recent books, highly recommended, as are his indicators. Van Tharp for Money Management, my buddy George Lee. I have a lot of programs. I think I forgot to hide my desktop, so I'm going to close it as soon as we get out of the PowerPoint. But I use a lot of different programs, but what I really need is a real-time charting platform, which can be Tradestation, Thinkorswim, or Genesis, probably one of the first 2 for most because there's no additional cost for data. And Genesis is not inexpensive. For my post-market analysis, I use HGSI, EdgeRater. For seasonality, I use a number of different things. Apparently, my subscription must have run out to Seasonality Trader. They're having issues today because I can't get in, but I use a number of different programs and a number of websites. As always, stock patterns are cyclical. I talk about this all the time. Where are we? And if you don't know where we are, you must be cautious. We've had a rip-roaring run up this left-hand side. We are getting to the point where whether this is a bear market rally or resumption of a new bull, a pause is probably in the cards. It probably has already started, as I will show you. That said, if the Fed comes out Monday and says, everything is peachy, we're raising rates, market's going down. The Fed comes out and says, boy, oh boy, we're concerned about the world, even though we're not so bad here. We're doing QE4, going negative on rates. You may see the market whipsaw because although some of that is positive, then people are going to wonder what Janet knows. If this is about the dollar and the yen and they raise rates, I still think the market's coming down. So I think it's going to be an interesting day tomorrow, a lot of volatility, and I think everybody's going to be looking to see what Janet is doing. Now, it may just be pausing to refresh, and maybe we're resuming a new bull. And, you know, somebody was talking on TV about how do you tell the difference between a bear market rally and a new bull. And they made the comment, sometimes you can't tell until it's over. Okay, I can't tell. We'll have to see. Where we are makes a big difference. I think we're still uncertain, so I'm continuing to have smaller positions and raise cash, but I have been playing the market aggressively. Well, not aggressively, fairly strongly to the upside. I started buying contra ETFs last week at the end. So if we look at where we ended on Friday, we see, interestingly, financials were strong. Makes me want to scratch my head. Maybe somebody thinks rates are going high. But then again, utilities were high, gold was high, foreign markets were high, emerging markets are high, materials are high. It was an interesting day. What wasn't working? Retail. Gap just had a horrible day. And healthcare, after a nice little run, gave back some. Major markets, as I look at them, you can see the big moves we've had off the bottom. This is the ES, the NQs, the YMs and the TFs. The ones that only one below the 200-day moving average remains the Russell 2000. We did bump up a little bit, but still not much on the VIX, and the dollar is still languishing. So major markets are clearly in uptrends over the short term. They still have not taken out their summer highs, so they're in a downtrend longer term. If I look at the weekly charts, what I see is a similar story, but you can see how the ESs and the NQs are really testing some moving average support. The YM has a little bit extra room, and the Russell's pulling back to their weekly 200, which is the 1,000 daily. So market has slowed down, but this, I have to admit, this was a pretty, let's see, after bottoming 7 weeks, 6 out of 7 were up, and the one that wasn't up until last week was a Doji bar. So strong move, looks like it might be slowing. Consistent with that, this is my Genesis view. The bottom row is weekly, daily, and then 5 minutes. On the top, the first column is E-minis, then NQs, then TFs, and IWM, because I don't want to pay for Russell futures, and the YMs. And one can see that everybody, let's see, certainly the E-minis, the NQs, the TFs, not the NYSE. Actually, this is NYSE here, not the Russell. I'm sorry. I do have Russell futures here. What am I thinking? TF. I don't have Russell futures in Tradestation. And then I've got the YMs here. Everybody went to a sell signal on Thursday. Interestingly, the NYSE actually recovered. I guess it was Wednesday they went to a sell signal. Tuesday, let's see, Wednesday, Thursday, Friday. Thursday on some, Wednesday on others went to a sell signal. Weeklies were still in a buy. So right now all I could tell you is that the market's had a huge run. It's now gone to a shorter term sell signal, and we'll have to see what happens with Janet. I really don't think anything looking backwards means anything with the Fed having an emergency meeting on Monday. So what are rates telling me? In white, I've got the 10-year Treasury yields. Mind you, this is the low of the Treasury yields in 2009 before the market bounced. This is 2012. I think there was some QE came in around here. And here's where we are today. As I've said several times, if the Fed raised rates in December, whenever they raised last year, why are interest rates keep going down? And my concern there, that's a message about the economy. So with the 10-year Treasury note heading towards the 2009 bottom at 1.5%, although we're still above 1.6 now. What is this telegraphing a rate increase, or is it telegraphing perhaps more QE? I'll take the latter. Or will they be like every other central government that has to pull their rate increase out? Now, talk about some bullish things. You can't really see it well in this graph. The white represents the AD line, and it's heading up on both the small stocks and the big stocks. What I wanted to point out was there's some underlying strength in this market. The AD line on the Russell 1000 set a multi-year high. I also heard that, I didn't look at the S&P the same. If we look at stocks below the 200-day SMA, they've moved back up, still on the lower half of the scale. And those at the above the 40 actually pulled back some this week as some of the overboughtness has been wrought out of this market. 3-month new high, new low, ran up to its multi-year high and came off a little bit more evidence of what was some overboughtness that has backed off of the market. The McClellan is sitting in the middle, certainly not giving me a buy or sell signal. Buckets move from overbought to very neutral. In fact, very few stocks above the upper Bollinger Band and a 50-50 of the S&P 1500 above or below the midline. Looking for a Hindenburg, which might be a premonition of a major move to the downside. We don't see one today. What would it take for us to get a Hindi at this point? It would take both the new highs and new lows to get above 2.2%, and it would take the new highs to be less than twice the new lows. A Hindi occurs typically before a major market correction. There has not been one in 50 years, although this year, I guess maybe it wasn't a major market correction. We're still pretty close to the highs. It takes you getting back to the highs to see one, and we're getting there, so I'm going to watch vigilantly for a Hindi. Here's probably the most concerning chart. This is Ian's buy-sell signal, the Woody indicator, which is the area where my arrow is. And notice it was green from February until the end of March. And then we had a shot of kahunas to the downside in the market on Thursday, and that flipped us to yellow. We have a couple of red dots in here. That's the NYSE. But for the most part, we're in yellow land or indecision. But is this the beginning of the end of this bull run? Maybe. Again, it depends what Janet says. Canaries in the coal mine really didn't do much last week. I think last week I talked about how they were sitting right above support. Well, they came and they tested it several times in the last 2 weeks, and they're still sitting right above support. However, notice that we have dropped the relative strength below the S&P 500, which we hadn't done until earlier in the week, and that the forces turned red. Bongos are still green. So the jury's still out on the Canaries. Lowry, buying and selling pressure continues to go higher. That can't be good for the market. And then the leaders chart, my leaders died. So back on April 6th, I wanted to or March 6th, I wanted to predict when this market was going to roll over. And for me, the rolling over the market was going to usually happen when the major leaders cracked. These were the leaders back in March 6th. And you could see that they've rolled. We've broken through the 50. Bongos have turned negative as of the 4th. We're distributing. So historically for me, the last stocks to give it up have been the big leaders. And when the big leaders crack, the rest of the market follows. This is not a good sign if you are bullish. So I put in here the news releases for this week. Tax day is on Friday. There's a lot here. PPIs, inventories, CPI, claims, sentiment. But I can put a big red X. All that really matters now is what the Fed says. If the Fed comes out Monday and raises, I think we're going to see some interesting volatility in the market. Unless it's because we're so strong in the economy and they feel very good about it. It doesn't feel that way. On the earnings, not a giant one, but let me point out a couple that you might care about. Alcoa used to be a bellwether. It comes out Monday. CSX on Tuesday. JP Morgan, SanDisk on Wednesday. Bank of America, Delta, Wells Fargo on Thursday. Citibank on Friday. So big banks, some technology, some transports coming out this week. Big week in earnings. As I say, it is a judgment call to hold over earnings. It's bad judgment to not know when earnings are scheduled. Market thoughts. Volatility certainly increased over the past week. Every time the yen seemed to shoot up, our market seemed to move the opposite way. We have an emergency meeting on Monday. I have no idea what to expect. Are negative rates in our future? Is the Fed prepared to talk up the dollar? Is it going to do a surprise rate hike? As I said, the rates on Friday close were not pre-warning this. Market appears to be rolling over as leaders index is broken. Canaries at critical support. Perhaps we'll get bailed out by earnings season. Not many in the docket this week, but some big ones. And prepare for the volatility. I'm going to be showing, this is something I do personally every day. And I try and look at what's going on in the market by showing two signals in this chart. I show a PPS buy and sell signal. And I'll show you where those come from. And I show the Elder Impulse Indicator. The Elder Impulse Indicator paints the paint bar green if you can buy or hold, red if you can short or hold, but you shouldn't be buying, and blue when there's no signal. The PPS indicator is a buy and sell. So I use the two of them. I do this every night. What do I see? I see that a lot of red and a lot of sell signals have come in on the short term. I see that the weekly is starting to get a lot of blue, but it's predominantly green except for financials, which are the leader of weakness. And monthly, we're still okay, although the Russell and the NASDAQ flipped to a sell. Monthly okay on most of the sectors except for financial. On my market meter, it's pretty clear that strength in the market is in energy and healthcare, with staples and materials holding up fairly well. Yet everybody except for energy and healthcare have flipped to a daily sell signal. I monitor this every day just to get a sense of how it changed from the day before and whether or not there is more danger. Pretty clear looking at this that short term the danger is here. Usual agenda. Let's review last week's chart of the week. These are presented for educational purposes only. Trading, especially options, carry substantial risk. I do not warrant these. I take them if they execute because, one, I want to put my money where my mouth is, and two, that gives me more reason to follow them and talk about them. This is not about stock tips. This is about demonstrating how I look at a chart, how I set my targets, my stop losses, and my buy point, and how I take the trade. So last week we talked about IBB poised to recover, and it did. If you had went long in LABU or any of the biotech stocks on Monday morning, you probably made some money despite the market sell-off. So we had looked at Gilead. I showed you everything that turned green in the technicals, mobile breakout from a squeeze, a kahuna, relative strength breaking above here, chart looking constructive, although I was concerned about the overhead supply at the 200-day moving average, overhead resistance. Didn't like the earnings. Decided to take the trade here if it crossed over 94.40. And here's what happened. We did take the trade as on Monday. It did close right about my buy point. It had traded up during the day. We are up on the market a small amount. With the market volatility coming in, I'll probably raise my stop to break even at the open or pre-open on Friday. Excuse me, on Monday. Now, let me just, probably not pre-open because we might gap down in concerning of the Fed. So I may wait till the stock takes its first trade before I set my stop. I would hate to set my stop, get stopped out, and then have the market rally after Janet. So I'm going to watch it closely to decide what to do. There's not much profit in here to give up. So we'll come back to the next chart of the week. And let's kill all that. Let's go into Tradestation. So this is where I get my market meter. I look at the NASDAQ. It's now got a person sell signal on the daily. On the weekly, it's got a buy on the weekly, and it's got a sell on the monthly. It's blue, green, and green. So the NASDAQ short term is weak. I probably wouldn't be loading up the longs right now, but I'm not jumping onto the short bandwagon until after Janet speaks. This is the NASDAQ. The Dow, also in a sell signal daily, weekly, and monthly in a buy, and you can see it's gone to red on the daily, showing some weakness. S&P, looks like the Dow, red weekly, blue, green, in a buy signal on the weekly and monthly, and a sell signal on the daily. And then the Russell, sell signal on the daily in red, still holding on the weekly and the monthly. As I mentioned, the best looking sectors were the utilities, healthcare rather, not utilities, which is in a buy signal daily and weekly, although not yet monthly, holding up blue, green, and green on the color bars. And then the other strong one was energy. A new buy came in on Friday with a gap up, green, and it's a buy in all three time frames. The weakness of the bunch would have to be finance, and you could see we rolled over on daily and weekly with red bars in both. If the Fed was raising rates, do you not think finances would be strong? And the interesting thing was, although I guess it was an inside bar, financials had a lot of stocks up this week, but up on Friday, I guess that was sort of recovery after falling earlier in the week. So let's go into HGSI. Let's go into Woodward and Brown user groups. Let's go down to Major Markets Plus. Let's rank them by price and volume, heavily weighting the last couple days. by raw combo, and you can see strength in this market this week was oil, gold, commodities, silver, bonds. That's not where we make money as growth stock investors. Essentially, the growth stocks are Russell and the small cap 600 were the weakness of the market. The dollar was also weak. Let's take a look at some of these. Actually, let's look at a 5-day return, and you could see that the S&P was down a little bit over 1%. The Russell was down 1.8, and the small caps were down 2.3 over 5 days. S&P 500. All right, so we know that there was a kahuna on these on Wednesday or Thursday, so I'm not going to look. So on these charts, obviously they're candlesticks. Red is 200, blue is 50, and green is 17-day simple moving averages. Purple is the 8-day exponential. You notice how we ran above that exponential until we broke down, and we're below it right now. The arrows have been sort of my thoughts about the market. This was a double top area. This was one of my declining trend lines. This was another declining trend line. We made it through the first one. We'll see if we make it to the second. Certainly looks like we're failing here. And this is kind of what I originally thought would happen, was that we'd bounce around and we'll see if we can hold at the 200 or do we break down and retest. Right now we're above the 200, but we're sort of chopping around here. If you look at the Dow Jones Industrials, ran up to our trend line and it failed. Can't be good. Look at the NASDAQ one composite. Failing not only at trend line, but at the 200-day moving average. Okay, so it'll be interesting to see where that moves. And if I look at the Russell 2000, did not quite make it to either the trend line nor the 200-day simple. So we have a lot of breakdowns appearing to form in the major markets. If we look at the dollar has been breaking down. Part of the issue right now probably is the strength of the yen, but you could see how weak the dollar is. How does the Fed get the dollar up? I guess they can start to talk it up by saying how great the economy is. I suspect they could probably also raise a rates a token amount, which would strengthen the dollar paradoxically. Perhaps they just put the June rate hike or April rate hike back on the table. The VIX, not pretending a major move. Yes, most major moves start from a very low VIX. I agree with that, but first it's got to start. I don't think it started yet. Maybe that was starting on Thursday, but Friday gave back some. Weak dollar, danger in the market. You know what that means to gold. And gold pulled back to support, and turns out that was a pretty good time to buy last week. Looks like gold may want to go higher. Silver follows gold and looks about the same. Several gold stocks made my list. If I look at bonds, another thing that you might expect to rise in the setting of market entropy and confusion, and bonds look like they're going higher too, perhaps to take out that trend line. So could be a tough week for stocks, but with Janet on deck, God only knows what's going to happen. Let's look at industry groups. From a top-down perspective, I like two-day force down to 56 positive. To the downside, I've only got 3. It's interesting that healthcare, which was strong last week, gave it up on Friday. And you could see that biotech still was up 3.5% on the week, so that wasn't a bad call, but it did give up some. Let's see what was leading it down on Friday. So Clovis, there's actually some interesting stories here. Clovis has got something in front of the FDA, a drug that's been struggling, and I think what happens is the FDA puts out briefing documents, which sort of telegraphs their thoughts, and one can see that the briefing documents didn't help, and looks like it wants to start another leg down. I have seen plenty of drugs get approved despite questionable briefing documents. So this may be one to watch. I wouldn't play with it until once approval is in. Regeneron Had some great data here, which led to a big move up a week ago, and it sort of languished, well, sort of didn't change at the end of the week, moved back up, and then pulled back down on Friday. This one was interesting, and the chart won't tell the whole story. Intercept traded all the way up to that 200-day moving average after hours, after they had their first drug approval, and then Adam Feuerstein or others came out and said the truth, which is, it's not a bad story, great approval, but it's already priced in, and the stock came back down. Buy on the rumor, sell on the news. Now, I just want to spend a few seconds here because this has been a storied stock. So let's talk about what happened here. Now, I frequently tell people to be careful when they see this pattern. And let me see if I'm trying to do it in a way that I can make it a teaching event. So when you see a stock which is basically basing forever, now this happened to be at about $60 a share. It's just compressed. And I remember sitting at a VectorVest meeting the beginning of January 14th, and I was day trading this crazy little drug company because it made a wild swing. It ran from 60 to almost to over 500. All right. Now, if you go back and search the Yahoo boards, you'll see that I came out and said, be very careful. I showed plug and a lot of other things that gave this pattern in the past and made a comment that it doesn't usually end well. So this was interesting because it actually, after pulling back from a high of 497, it pulled back and then it went back up and got back up to here, where the high was 485. So, and then it started to sell off. Now, when you see these red bars here, it tells you there's some weakness in the overall market. Had a bunch of kahunas. And the stock pulled back. You'd expect this is a place it might bounce. Now, you'll notice if you're bullish and you bought the stock before it moved up, down here you had a 4-banger. Awesome. But if you bought it any time after here, you're at break even or losing money. Bounced at the 200, and then ultimately it failed at the 200. Failed trying to retest here at the 50. And I won't say it did a round trip, but it got back down . As you can see, it got back down, so it's never gotten down to that 60 level. But anybody that bought stock and held it from that day got hammered. All right, so it got down to less than 100 earlier this year. Well, what happened now? It got the drug approved, and the most it could get it up to was about $170. There's a moral here. And the moral is, don't chase these stocks that have these massive moves, especially when they're on news on drugs that are still in development. And crazy story. Enough of that. All right. Be very careful when you see stocks that have that kind of a move. Biogen, one of the leaders, you can see, like the rest of biotech, just languishing below the 200-day moving average. All right, let's look at the winners and see if there's anything to like. A lot of energy stocks. In fact, exploration, services, integrated, midstream, and refiners. So 1, 2, 3, 5 of the top 9 are energy. Steel, Reits, telecom. Is that growth stock land? I don't think so. That tells me probably that adds to the potential defensive posturing. Beverages. So I'm going to look at a couple of these and tell you, go pick your one you want. You look at these things on a weekly, and this here is Whiting Petroleum. Peaked almost at 100, traded back down to 6 on the weekly. Kind of looks like that slide I show you about stock, the pattern that goes over and over again. It's had a nice move off the bottom, way down, way below the 200. mostly turning green. Eventually these things go up. Is this the right time? Here's a little bigger story. Anadarko Pete. Notice that its volume revenue's gone from 5.8 billion a quarter to 2, and the stock is trying to come off of a bottom of about 30. It's back up to 50. It's had a big move, 14% in the last 3 weeks. Is it over yet? More to go. Marathon Oil, Range Resources, like this one probably as much as any. Don't like the earnings. 500 million sales monthly, come off some from its peaks. Broke above the 200. Technically, it's stronger. Mobile breakout, pocket pivot. Kahuna, probably should have taken this as my stock of the week. Devon will come back to, similar pattern. Continental looks a lot like Range Resources. So these are some that you might want to put away, or hopefully did 2 weeks ago, and wait for a recovery. Doesn't mean they're not going lower. Gold stocks, with gold strong, no surprise, gold is at multi-month highs. You could see a 5% move nearly on Friday on American Barracks. It comes out to a multi-month high. Looks like it wants to go higher, obviously depending on what the Fed does. Newmont Mining, same chart pattern. Goldcorp hasn't really broken out yet on Friday, but look at the group strength. Then a couple of small guys that I liked a lot. Seabridge, certainly leading higher. It's a cheap stock. It was a lot cheaper 6 months ago. And then the other one that looked kind of cool on the cheap side was Nova Gold, another nice pattern. So probably not a bad time, at least maybe even 2 weeks ago, to start loading up a little bit on gold. Oil gas services, with a big move in oil, no surprise that these two names come to the top. A bigger week for Halliburton as more and more talk about the breakup of their Baker Hughes merger. Broke above the 200, a little bit of a shooting star, however. Schlumberger, a little bit more of a muted move, but trying to get above its 200 as well. And like the oil stocks, have had a pretty significant move off of its lows. Baker Hughes, again, perhaps the marriage with Halliburton under risk here. Weatherford, so far the top two look the best. So Neighbors doesn't look too bad if it can break above the 200. That's services. Integrated oils, here's Royal Dutch Shell. I have some ExxonMobil still, and you can see it's trying to break above the 200. Look at that dividend on Royal Dutch Shell. Probably not going anywhere. Look at the amount of revenue per quarter, although it's half of what it used to be. 6.5% on Royal Dutch Shell. Petrobras, no dividend. Don't really trust this with the corrupt government, but from a chart pattern breaking out. Chevron, trying to break out, 4.4% dividend. BP, 7.9% dividend. And then ExxonMobil, 3.5% dividend, but it's above its 50 and its 200. So you might want to play there. That was RDSA with the big dividend. The regular Royal Dutch Shell, actually I don't know which is the regular. This is B, also has a similar dividend. Fourth group down is, our fifth group is Diversified Banks. I actually put on my buy list Royal Bank of Canada. These are all foreign banks. I don't know what that tells me about what the dollar is going to do. But this is ITUB. I don't know enough about it to say anything. It's an ADR. I don't know if it's French, if it's Spanish, if it's South American. Pays a teeny little dividend. I did like Royal Bank of Canada, which is the same exact pattern. It pays a 5.5% dividend. If gold and silver and oil start to go up, the Canadian economy will roar. Their dollar will strengthen. Their banks will recover. And perhaps this is what we're seeing here. Royal Bank of Canada. Do your research. I don't know anything about these companies. All right. Midstream oil and gas, big dividend payers. These have been hammered. And this is the typical pattern. You've got stocks that have dropped from top to bottom. %88% over 6 months. Yowzy. All right, and now from that bottom, they've had a roaring move up. A 93% move off the bottom. But as you can see, after you lose 88%, you're going to have to go up probably 400% to get anywhere close to where you were. So you want big dividends, and stocks have had a big move. Here's ETE at 14.2%. Williams Companies, 15.8%. ETP, 13%. Kinder Morgan, only 2.8%. Williams Partners, 15%. Targa Resources, 12%. Buy these at your own risk. At some point, these are going to be a bargain. One thing that is at risk, probably on all of them, are their dividends. Please check company sources. HGSI relies on third-party data. Often that data does not reflect lower dividend rate until a dividend is missed, and maybe until 4 dividends in a row are missed or lowered before you'll actually see the forward-looking rate. Next group down are Reits. Another perhaps defensive play. Here's HCP, a healthcare REIT on the way down. Nice move off the bottom here. It pays a 6.6% dividend. Crown Castle 4.0, Weyerhaeuser 4.0, Stone Capital 4.1, American Tower only 1.9. These things seem to go up and down. Maybe they're bond equivalents. They pay nice dividends. I own a couple of them. The ones I like are in this space here where they manage technology industry tenants or sort of the data server space. Here's DLR, one that's just been in a beautiful growth mode from 66 to 90 since October, paying a 3.9% dividend. I think QTS is another one of these. I thought I saw this a few minutes. Another nice uptrend, paying a, let's see, make sure, 2.9% communication carriers. So there are some nice spots. Personally, I'm a little bit afraid of shopping centers, but some of them looked okay as well. Refiners, another group beaten up to pay a dividend that maybe want to start moving higher. You know what, let's take a look at seasonality. Now, I couldn't get into my seasonality trader. I have a feeling I've expired. So let's just look here at Valero. Let's start with OIH. Let's look at the oil services and see if there's any seasonality on the oil services. So what do we see here? We see that we are right here, and we're going into a seasonally strong period of time. If I buy, pay attention over here. I layered on Friday, and it tells me over the next 30 days I've got a 7 out of 10 likelihood of being positive. Average return 13.3%. So there have been some negative years, especially in 2010, 11, 12, but there's been a lot of positive returns during this period of time for oil services. Now let's look at a couple of the big ones here. VLO. So looking over to the left, not a lot of seasonality to help me out. Although starting on April 14th, April 15th rather, I do get a 10 out of 10 up period of time, and with a return in 10 days of 5.33%. Remember over here it's a 30-day return. This tells me that I've got a strong period of time coming up there. Who's another big one here? Let's look at HFC, is that right? Holly Frontier Corp. Probably doesn't have enough data. Maybe it does. So Holly Frontier Corp, Its strength is out in the July time frame. Okay, and then let's look at Tesaro. An area of weakness that comes in May. All right, so seasonality doesn't help me. So here's Marathon Petroleum, beaten up stock, kind of looks like an oil stock, moving up off the bottom, pays a dividend of 3.3%. Let's say that's 4% of 40, so it's $1.60. They got plenty of earnings in this stock to pay its dividend. I like MPC. Valero, not as beaten up, pays a 3.8. Phillips 66, actually above the 200, pays a 2.6. PBF, I like this chart because it's coming out of a squeeze, had a mobile breakout, everything turned green in a kahuna. It pays a 3.6. Not a giant company, though it does have revenue of $12 billion plus a year. But I like the chart pattern a little bit more. And here's Tesaro, you can see coming off of a lower low, pays a 2.4% dividend. Not a story of growth. Who would have thought that U.S. Steel would be leading the market recovery? Not I. Pays a 1.2% dividend under a ton of demand. Its earnings per share growth is horrible. It's had a gigantic move off the bottom. Let's just take a look at it. 142% over the last 39 trading days. Does it have the fundamentals to support it? I don't know. Is it just because U.S. Steel was beaten up so bad from $45 down to less than 10? It's had a huge move. It's also brought others in the steel complex with it. Here's Tanaris. This one looked interesting. TS, 3.6% dividend and breaking above the 200-day moving average. Mobile breakout from a squeeze. A pocket pivot and a kahuna. I'm interested in this one. Nucor, really pulling back to support, looking for some energy coming in. Actually has earnings per share growth, pays a 3.2% dividend. And then lastly, telecom carriers. I still have a position in CTL. I'll show you why in a few seconds. These are, in a way, similar stories. Here is Vodafone. Telephone companies are not going away. Pays a dividend of 5.2%. Mobile Telesis, looks like it wants to break out here. Mobile breakout squeeze. Kahuna, 7.7%. VIV, not much of a dividend. See if I can find you Century Tel and show you why I like it. Nope. CenturyLink, that's what it's called. CTL still pays a 6.8% dividend. Picked it off as it was coming across the 200. I've had a little bit of growth in it, but it pays a very nice dividend of 6.8%. And look how steady its revenue is. All right. So we've looked through the top 10. What is the message? Then we have beverages. We got things like utilities, more steel. The message to me is energy is king right now. How will the Fed end this rally? With an emergency meeting and a rate hike? We'll see. I'm joking. God only knows. I don't know. Energy is king. Dividends look strong. And I think there's increasing risk coming into this market. All right, so we've started from the top-down approach. We looked at the markets, confusion, more volatility. Could go either way. I'm concerned about the downside. We looked at industry groups. Now let me show you a couple of top-down things that I do within HGSI. I'm going to go to my reference groups, all securities, and let's look for stocks that are sitting at their 50-day moving average that had some momentum come in. I'm just looking for stocks at good buy points. Sideways, not interested. Not interested. All right, Dr. Pepper Snapple, is it in an uptrend? It's clearly in an uptrend. Is it pulled back to support? That's the whole purpose of the scan. It's sitting right on the 50. It had a kahuna, a mobile breakup from a squeeze. I don't like the fact that it's still bongo weekly negative, but this is one that looks interesting if I was going long the market. Pays a 2.3% dividend. So the purpose of this scan is to find stocks that are above the 200-day moving average, a crude scan to see if they're in an uptrend, that have pulled back and are within 1 or 2% of their 50-day moving average, so they're basing, and they had momentum come in. Dr. Pepper looks interesting, and here's a semiconductor stock. Too close to the 200. So not much showed up on this scan. Let's take a look at my PSR reversal close at a squeeze. These are stocks that by definition are right below the PSAR reversal dot, so that means they're about to have a breakout, and they're squeezing, so they're not extended. Let's take a look at a couple. Royal Gold, this has been a gold leader. Big move up, sideways. So why do I like this stock? Everything is green. Mobile breakup from a squeeze. Look at this group index. It had a pocket pivot on Thursday, kahuna earlier in the week. But what I really like about the stock is this. The stock closed at 52.75, right below its high at 52.97. That PSAR dot is at 53.17. And I could look at this stock and say, I want to buy Royal Gold, but I'm going to wait and only buy it if it takes out its PSAR dot. So I might set my buy stop at 53.20. Now, the other reason why I like it, because it's basing, I could probably say somewhere around here, it better not get below. So I could tighten it up to the lowest bar in the last 4 or 5, 1, 2, 3, 4, 5. So I'm going to put my stop right there, which is the low of this day, which is 49, say at 49.50. So I'm going to put my stop at 49.50, my buy at 53.20. So about $3.70 risk, which is about 6%. That's a very logical place. I'm about to have a golden cross, the 50 above the 200. I told you before I think gold is strong. And then I could put that order in and get on a plane. I call this my get on a plane setup because I've got a clearly defined buy signal. I set my stop immediately. Market tanks in gold on Monday because of what the Fed does. I probably don't get filled. The market takes off in gold, it might gap against me. I might not get filled. But if the market is an orderly fashion day, I'll get filled if it goes up. Once I get filled, I'll put a stop in, and that stop should protect me from getting killed if the market changes. What else is in this get on a plane trade? Estee Lauder, Chevron. Here's one of my oil stocks, 4.4% dividend. Let's look at a weekly and see how far this thing has fallen. Over $130, down to 75. Clearly it's had a big move off the bottom. A lot of clear space here until that 200-day moving average. Let's go back to a daily. And we see it's had a couple kahunas come in this past week. Mobile breakout from a squeeze. 4.4% dividend. I like this one a lot. And again, same story. Close was at 96.33. High was at 96.87. PSAR dot was right above the high, so I'd probably set my PSAR dot, my buy takeout at 96.90, 96.95. I put my stop probably at the bottom of this day, about 92.60. So I'm taking about a 4% risk. And again, I feel comfortable getting on a plane. PG&E, Aflac. Again, so the purpose of this is to find stocks that are in a squeeze, there's yellow there, right below the PSAR dot, so they might be coiling, ready to break out. All right, other things that I like to look at, I look at stocks that had huge volume on Friday. So I have one called Volume Buzz. Some of these are AFOPs, a takeout. Mercury System, Lucas Energy. Here's one of those small energy plays. Biotech, Pharma. Nothing really jumps out at me there. And these all come built into HGSI. How about stocks with strong technicals? So I have a number of different scans. Reliance Steel, expensive steel stock, 2.3%. Has the same pattern as U.S. Steel. New Gold, cheap gold stock. Another cheap gold stock, Yamani Gold. Here's one that actually looked interesting. So this is a scan for stocks that have strong technicals. Look at Valley, iron ore in the steel complex. Broke above the 200 here, pays a 2% dividend. Not much in the way of earnings, tons of revenue. This is a big play on Brazil. If Brazil's recovers, then this you'd expect to lead the way. All right. So I basically build a watch list through a number of scans. Within Tradestation, I like to look at, sorry about this, whenever I move my things around, this is what happens. My favorite place to find stocks in Tradestation, and this is this in Genesis, is to look at the weekly HCDs, high closed dojis. And I'm going to show you why I like energy so much. So the first thing is, this is my best buy signal. This comes from John Person. So I could see that I've got a bunch of biotech, some gold and silver, and lots of oil gas operations. And then this one is integrated, I guess. So this tells me where the strength is, because this is a powerful buy signal. So let me show you what I mean by a high closed doji. A high closed doji is defined as the stock is in a downtrend. So this is an oil stock, XOP. Trust me, even though it's sideways here, it's in a downtrend. It's defined, and we've got two of them here. It's defined as the stock is in a downtrend. It has a doji, and John has some very specific requirements of what a doji is. And then within X bars, it closes above the high of the doji bar. That triggers a high closed doji. In all the candlestick signals that have been back tested, this is the one which is the most powerful, highest probability reversal signal. And then there are trading rules about how to trade a high closed doji. So it doesn't look like much here, but let's see what happened with this. So you had the doji here on 226, and it closed at, the high was 25.17. I knew on the 4th, on the week of the 4th, and it doesn't count until it closed Friday, that I was closing above that high at 28.95. That is my buy price. I either buy at the end of the day or at the open the next day. I got up to 31.68, which is almost probably 7 or 8% return here. Pull back for 2 days, a doji, and I have another high closed doji coming in. So this is the best signal that John has, that anybody I've ever seen has, not just John. And it's a very high probability buy signal. The key is you've got to be in a downtrend, and we're in a downtrend. So every one of these stocks, here's Randgold, had a high closed doji. This is not in a downtrend anymore, so I would skip it. Win has had a big run. I got into Win back here when it was in the low 60s because it had a high closed doji. And then the other part of the complex, number 2, is on-balance volume breaking out ahead of price. So what I've scanned here are various stocks that had high closed dojis that I like to fish from. Some of them will already have broken out and be too late. So here's another one, Sarepta. I saw that a second ago. Downtrend, here's a high closed doji. Look at on-balance volume. So there's a divergence here as price is as volume is leading price, and that often leads to their higher. Here's another stock I liked, SM Energy. Again, the second high closed doji in a row. Look at volume taking off. I can look at a lot of different energy. Here's Murphy Oil, a high closed doji. Here's Matador, high closed doji. Oasis, a high closed doji. So I find that this high closed doji scan to be the best I have for finding stocks. And then I've got the PPS buy and sell signals and various combinations of them, which is what some of the things I love about John's stuff. So let's look at my list of stocks that I found for this week that looked interesting and see there's a couple charts to show you. So you notice that I had a lot of exploration stocks, the midstream stocks, the Reits, steel, a lot of the things that refiners that came up on our top-down review. Here's that Royal Bank of Canada. Now, I can filter this list, and let me look at my filtered list. These are some of my favorite stocks, my filtered buys. Let's just take a look at these and let me make some comments. LABU, this is not something that I'm recommending you buy. This is a 3X biotech. In fact, has a high closed doji to the downside here. Biotech has fallen far. If biotech starts to move, this is one way of playing it. It's not yet ready to be played. We looked at XOP, was the first high closed doji analysis I showed you. And this is really indicative of a lot of these oil stocks. Big downtrends, turning green here, coming out of a squeeze with a couple of kahunas. CNX, Consolidated Energy. I thought this was a coal play, but look at this. Killed, broke above the 200-day with a kahuna out of a mobile breakout squeeze. If it wasn't so concerned about this being a coal play, I might have, yeah, it is a coal play. I might have been more interested. Hard to buy coal. APC, this is another oil gas play. Earnings per share going down, trying to recover. Matador has to get above the 200, but nice recovery, all green. Range Resources, I love this. Break above the 200 with a kahuna, pocket pivot, mobile breakout from a squeeze. We'll go look at this, John, in a second. RRC, here's that SM Energy trying to go as well. Catalent, I didn't like the shooting star. It ended up on Friday, but I like the weekly pattern. Hologics, this is a healthcare stock that I think is going to run. Sideways move. I need some energy to come in. Not yet. Here's one of those MLPs, pays a 12.5% dividend, ENLK. Here's another midstream TRGP. Again, I need to see some momentum come in, but it's coming out of mobile breakout from a squeeze, pays a 12% dividend. Here's a employment, Korn Ferry, high-end executive search, makes money with some growth. Big move on Friday with the kahuna. Greenbrier, earnings are out. They refurbished trains, even though trains have got hammered. Well, trains did get hammered, which brought them down. Their backlog is gigantic. It's over the last month, it's up about 11%. Looks a lot like an oil stock, does it? Pays a 2.6% dividend. And then Timken Steel, TMST. Here's another steel stock that looks like it wants to run. Mobile breakout from a squeeze. Kahuna, everything is green. So let's look at RRC and then my stock pick of the week, which should have been or could have been RRC. All right, so Range Resources, the reason why I didn't pick it is it's already had a big run. And OBV is good on the weekly and the daily. Here's a daily PPS buy, a weekly PPS buy. It's probably a good time to be buying this stock. Let's take a look at what I picked for my stock of the week. So remember, as I said, these are not stock recommendations. This is more discussion of what I look for and how I execute. I decided to go with Devon Energy. This has already had a move, and to be honest and frank, I already have a position in this stock. I took one back here closer to 25 when it broke above the 50. Would have been smart if I took one back here, but I wasn't ready yet. And that, by the way, was a high close Doji the day I took it. So Devon Energy, it's a big one, close to $3 billion sales on a quarterly basis. So it's a big producer. It has a 3.3% dividend yield, although it's not making money projected. Everything turned green. It's coming out of a squeeze. Relative strength is better than the S&P 500. The last set of kahunas and things were back when I took the trade. Why would I still take it? It's already run. Well, on the daily, it's in a PPS buy. Notice how strong OBV is. Bongo daily and weekly are green. It's in a squeeze, and it just had a recent PSAR reversal. On the weekly, it's got a high close Doji. It's in a weekly buy. Volume is shooting up ahead of price. So the problem is, since it's already run, I got to take a little bit more risk. I'm risking 12%, long at 29.35, first target 33.20, stop at 25.50, 385 a share risk, about 12%. I'll buy 500 shares. And as I always say, once I take my target, I take half off, move my stop to break even, and I play with the bank's money. And then if the stock continues to move up, I'll put a chandelier stop on it somewhat arbitrarily and try and maximize my return. Someone asked how long my trades are, and my answer was it really depends on the market. I take a trade with the hope of holding it a long time, weeks, months, because I make my biggest return the longer I hold the stock. However, the longer I hold it, if I don't have good stop and money management, my percent wins goes down. So by having a 1-to-1 risk target, in a bullish market I might go to 2-to-1, I take off half very quickly, which means I'm guaranteed to make money on half. I move my break even, my stop to break even, which means I'm not going to lose on the second half, so I guarantee a win on a trade. And then I let that piece run and trail my stop up based upon the market with a chandelier stop. The goal, not lose money, preserve capital, but also not miss out on some big runs. On that note, I just want to remind everybody of a couple things. The PUG user groups. To PUGs listening, I'm going to send something out probably tomorrow. I think Wednesday I'm going to do a session with just me. John will be invited, but I just want to go over some things that I've been doing. And I did also want to call people back there, just remind them of the upcoming live event, September 23rd, which is a Friday from 9 to 5 p.m. in Palm Beach Gardens. Location to be determined. It will be price also to be determined based upon how many people come. John's seminar is Saturday, Sunday, and Monday. I invite anybody who's coming to John's seminar to sign up. You'll get special pricing. Those that are not coming to John's seminar, I'll try and convince you to go to John's, but you can come for one day, pricing to be determined. You all have a great week. Thanks, everybody. And let's see what Jumpin' Janet does on Monday. Goodbye, everybody.